Our top story tonight, it's the dawn of a new era in centre-state relationships. The central government accepts the 14th Finance Commission proposal to give 42% from the shared pool of tax collection to states, a significant jump from the current 32% devolution. The Prime Minister says the one-size-fits-all approach is now over. The move may also pave the way to get states on board for the goods and services tax.
The centre's elbow room to spend is set to shrink after higher tax devolution to states. The fiscal consolidation roadmap may also be impacted, but the Commission believes the government must stick to the fiscal deficit target of 3.6% for the next fiscal.
Fireworks in Parliament on day 2 of the budget session. The government tables a land acquisition bill in the Lok Sabha amid vociferous protest. The BJP faces opposition from its own allies as it goes into a huddle. Opposition parties corner the government in the Rajya Sabha over coal and the insurance ordinances.
Your experts are creating a mirage, says the Supreme Court of the Sahara Group, after the company says the Mirak deal has fallen through. The Supreme Court allows RBI to act against Sahara Group and refuses to extend teleconferencing and other facilities inside Tihar jail.
The alleged case of corporate espionage reaches the Defence Ministry. One official arrested for providing forged ID cards to the accused. Judicial custody extended for 5 of the corporate executives who are accused.
Budget is going to be definitely an investment-led budget.
Caution is the buzzword on the Lal Street as the union budget looms. Major indices clock marginal gains in yet another volatile session. Sensex just above 29,000.
The US Fed will remain patient on rate hikes over its next couple of meetings, says Janet Yellen. Stocks on Wall Street recoup losses. Oil prices rebound after Libya shuts down its largest field, Brent near $60 a barrel.
After Suzlon, Sun Pharma's Dilip Sangvi set to step up his investment drive. A 47% stake in Hindustan Oil Exploration Company next on the radar. That's an exclusive.
Battling numerous litigations, the government defers the next round of coal block auctions. The coal secretary says the auctions, which were supposed to start tomorrow, will now be held on the 4th of March.
R.K. Pachauri steps down as chairman of the United Nations Global Panel on Climate Change. This after a 29-year-old female researcher accused him of sexual harassment.
Oh, that's going to be caught somewhere tough. Oh, he's going to be one away now after this.
While he hadn't scored a century in one-day internationals for almost 2 years, and Chris Gayle broke that barren run in style by hammering the first double century in a World Cup. Good evening. Thanks very much for joining us on India Business Hour. And Gayle smashing Zimbabwe.
Maybe he got charged up after that humiliating defeat to Ireland, but now Gayle is the 4th man after Sachin, Sehwag and Rohit Sharma to also slam a double century. 16 sixes, the highest in a single innings, but he shares this record with Rohit Sharma and AB de Villiers. The partnership of 372 between Gayle and Samuels is the highest ever for any wicket in a one-day match. I can go on and on, Shireen.
Yeah, no, please don't. Stop. And it's not just Chris Gayle. The Modi government also made history today by signalling a tectonic shift in centre-state relationship, and that is our top story tonight. Days ahead of the budget, the government has given states reason to cheer. Now, as part of the recommendations of the 14th Finance Commission, the centre will now part with 42% of its central taxes as against 32% previously, a jump that the Prime Minister has called unprecedented and historic. This will be accompanied by a cut in state grants, including a reduction in the number of centrally sponsored schemes. However, the centre admits fiscal space for the centre itself will reduce on the back of this policy decision. Sapna Das pieces this together for us.
Transfers to states will see a quantum jump as the centre accepts the new 42% devolution formula of the 14th Finance Commission. This is the largest ever change in the percentage of devolution so far. In the past, finance commissions have suggested hikes in the range of 1 to 2%.
Every spending within the territory of India, whether by the central government or the state governments, is going to add to the growth process. And therefore, the central government, let alone grudging the fact that the states have got money. We are very happy that the states have got money.
The consequence of this much greater devolution to the states is that the fiscal space for the centre will reduce in the same proportion. Against a total devolution of 3.48 lakh crores approximately in the current financial, this will now move up to a massive 5.26 lakh crores in the new fiscal. This translates into a year-on-year increase of 1.78 lakh crores. But just before the budget, the centre is unwilling to reveal its mind on what could be the impact on the centre's finances and, more important, on its fiscal consolidation roadmap.
Obviously have to take these into account in planning the fiscal roadmap going forward.
Also the fact that we put all the energy in getting the GST through. In the sense we are committed to getting the... Yes. So from that point of view, if all over the country there's going to be one large taxation system, the GST, and if the devolution has to happen to the states with the collection being under GST, it's only fair that the formulation is worked out nicely, clearly.
The 14th Finance Commission has also ignored the plan and non-plan distinction and is viewing the bigger devolution of central taxes as a composition shift in transfers from grants to tax devolution. Consequently, the Commission expects at least 30 centrally sponsored schemes to be transferred to states and central assistance to state plans as a whole to come down. The centre on its part has decided that only 8 of the centrally sponsored schemes will be delinked from centre support. Flagship schemes like the MGNREGA are proposed to be continued. The 14th Finance Commission on its part estimates that a drastic cut in the centrally sponsored schemes and overall reduction in central assistance to states should give the union government enough fiscal space to meet the 3.6% fiscal deficit for next financial.
The fiscal targets for the next year as it was adopted by the medium-term fiscal plan is 3.6 and the year afterwards is 3. But not to pump the economy, what we can do is, one, the higher transfers to the states will result in higher capital expenditures because they don't really have a serious revenue deficit issue.
The Commission has also identified 11 revenue deficit states and central grants to the tune of a massive 50,000 crores every year for the next 5 years. This is a recommendation that constitutionally has to be accepted by the centre. Leading the pack of revenue deficit states are West Bengal, Andhra Pradesh, Himachal and the whole of Northeast. In New Delhi, Sapna Das.
Government accepting the 14th Finance Commission. Meanwhile, there were fireworks on the second day of the budget session of Parliament. The government tabled the new land acquisition bill in the Lok Sabha amid vociferous protests by the opposition parties that staged a walkout. The battle lines have been drawn. The Prime Minister told his MPs to bust the myths which are being propagated by the opposition over the changes to the land acquisition laws. BJP Chief Amit Shah has also formed an 8-member team that includes leaders of farmer groups.
But the NDA itself is a divided house when it comes to changes to the Land Acquisition Act. BJP President Amit Shah is currently holding a meeting with all allies to address their concerns. The Swabhimani Shetkari Sangathan has already opposed the bill, and now the BJP's biggest ally in Maharashtra, Shiv Sena, has skipped the meeting. The party has also declared that it is not in favour of the proposed changes to the Land Acquisition Act.
शिव सेना ने हमेशा किसान के हित में बात की है। हम ये चाहते हैं कि इस देश में आर्थिक और औद्योगिक विकास होना चाहिए। जमीन चाहिए, पानी चाहिए, बिजली चाहिए, वो देना ही चाहिए, सरकार की जिम्मेदारी है। लेकिन ये देश किसानों का है। अगर एक कानून हमारे किसान मानने को तैयार नहीं है तो मुझे लगता है कि हम उनसे फिर एक बार बात करनी चाहिए। किसानों का मन बनाना चाहिए।
दिल्ली के किसी भी हिस्से में जबरदस्ती जमीन नहीं लेने देंगे और जब भी जनता की मर्जी से जमीन ली जाएगी उनको पूरा मार्केट रेट के हिसाब से मुआवजा दिया जाएगा।
It's going to be tough on the land ordinance, and which is why you're seeing the BJP go into a huddle this evening. The meeting started at 6 p.m. A meeting of the NDA and its allies, the BJP, trying very hard to sell the idea of the land ordinance. Now, the Rajya Sabha is the government's Achilles heel as it does not have the numbers there. Opposition parties trying to corner the government into a discussion on a slew of those ordinances, including coal and insurance. Of course, those continue to be the big flashpoints. Finance Minister Arun Jaitley said that the bills before the upper house are infructuous infructuous, as new bills will have to be passed by the lower house first, but they did not convince the opposition, and for now that matter has been deferred. Now, after the war reverts, the government has decided to defer the withdrawal of the Coal Insurance and Motor Vehicles Act Amendment Bill. This means that these three bills cannot be tabled in the Lok Sabha as things currently stand. Ritu joins us now with more details. Ritu, it's a stormy start to the session. As expected, the government seems to be on the back foot. At least in the upper house, it doesn't have the numbers.
An action-packed day in Parliament. The basic idea of the Treasury benches was to initiate measures to convert the 8 odd ordinances into respective laws. But the Treasury benches faced a lot of resistance. Let me start with Lok Sabha. They introduced the MMDR as well as the land acquisition bill-related amendments. But government is facing a lot of opposition regarding the land bill amendments. And it remains to be seen how this gets taken forward. There is hardly any difference between the ordinance and the bill that was introduced. Rajya Sabha, lot of drama. The government wanted to withdraw 3 crucial bills, including the ones on insurance, but that did not happen because the opposition stood united, and the government, as a result, had to defer its plans to withdraw the 3 crucial bills from Rajya Sabha. The implication is that there's a huge big question mark on what happens to insurance, because as of now, the insurance amendment bill is still the property of Rajya Sabha, and for it to become a proper legislation, it has to go through the Lok Sabha route, because there's already an ordinance on insurance, and hence it will be very interesting to see what happens going forward on crucial ordinance-related matters which have to be converted into legislations. We spoke to top leadership in TMC and Congress, and this is what they had to say regarding today's event.
No doubt we have been on board, but that doesn't mean they will get a free license to bring about any ordinance they like. Under Article 123, these things should have to be brought up only on a question of emergency.
Right.
No, they have not looked into it. In an ordinary routine bill also, which could have been passed, immediately the House meets. If bringing out an ordinance like this, taking the Constitution for granted, or the Parliament to grant it.
Frankly, at about noon, we were wondering, has anyone changed their stance? Everyone is saying we haven't changed the stance. So at 2 p.m. today, the message was very loud and clear. Congress, Trinamool, the left, the JDU, the SP, the BSP, the DMK, everyone was united. We took a head count at 2 o'clock when Mr. Jaitley was trying to withdraw those FDI bills.
Not allowing those bills to be withdrawn was a conscious strategy.
It was my motion was moved on that. Of course. And not only mine, everybody else was united. So when we did a head count, we were 121. This side was below 50. So they knew the writing was on the wall.
The stormy start of the budget session of Parliament is not going to be easy for the BJP to get those 8 ordinances through. Meanwhile, the government stands to gain an additional 20,250 crore rupees this fiscal from the excise duty hike on petrol and diesel. This was stated by the Minister of State for Finance, Jayant Sinha, in a written reply to the Rajya Sabha. This is the first time the centre has stated just how much it stands to gain from the excise duty hike. Do remember, excise duty on petrol and diesel were hiked 4 times since November last year, a move that has prevented consumers from enjoying the full benefit of 60% fall in crude prices. So the basic excise duty on petrol is almost 10 rupees a litre.
So that's the cushion that the government is playing around with, and of course it will get more on that oil bill front as well, not just the excise gain that we just talked about. But with the budget around the corner, caution seems to be the buzzword on Dalal Street. Another volatile session with both major indices ending marginally in the green. The Sensex ended just above 29,000 with a gain of about 30 points. The Nifty saw some profit booking in the last few minutes, managing to end with meager gains. Mid-caps under pressure today, and the mid-cap index lost close to 30 points. But will this recent spate of volatility persist? CNBC TV 18 spoke to a whole host of fund managers to get a check of what the markets want from the Finance Minister on the 28th of February.
Inflation is at a historic low, so obviously the pressure on individuals, P&L is reduced significantly. In fact, the way oil prices have fallen and the way the diesel and petrol prices have been cut, there is already a substantial saving in the hands of every individual. Now you also take into account the fact that we are expecting some interest rate cuts, so the EMIs on your housing loan, on your car loans will automatically also get reduced to some extent. So I think on on the consumption side, things are automatically falling in place.
Okay.
From a government's perspective, obviously the push has to be on the investment side, because the private sector definitely is going to take some more time before they are ready or their balance sheets are ready to undergo massive expansions or massive capex. And I think from our perspective, we would look at the government starting the investment process first. So very clearly, in short, the budget is definitely going to be an investment-related budget.
Okay. In the budget math, Dharmesh, do you see space for them to spend on infrastructure? Yes, there are savings on account of subsidies, especially fuel. Yes, there is higher tax collection on account of the new taxes that they've imposed on fuel or the hike in excise rates, and that could be substantial. I mean, on one hand, I think the savings amount to almost 0.5% of GDP with regards to the subsidies. The extra tax collection, I think by some estimates, amounts to about 0.5% of GDP. So we're talking about a percent of GDP as leeway, some reports say. What's your math working out to?
Well, I think he has enough space to spend this time versus last time or even a few years back. Because oil prices where they are, the subsidy burden is not so high. Even the divestment targets last time were not met, despite that we are in a good condition. So this time around, in fact, because the markets are buying, there can be higher divestment targets and achievable ones, rather than only setting targets for the sake of it. So I think he's got enough space to spend more money this year around than last time. And end of the day, everybody now is talking about development and growth. And for that, you need to spend money. Unless the government doesn't kickstart the economy, you're not going to see this growth coming in. So now it's clearly, it's like you're playing the last 10 overs and you have a chance to only 2 wickets down.
Will this market be disappointed if he sort of keeps a very firm eye on fiscal responsibility? Prashant, I'll put that question to you. If he keeps a very firm eye on fiscal responsibility and says, I'm not yet fully comfortable to start spending, on infrastructure or to sort of start moving public spending, I'd rather that I'm able to sort of meet my BM related targets, and rather that I'm able to pass a new Fiscal Responsibility Act, and once I've seen 12 months of comfort, then consider a big public spend push. Is that what these markets are okay with? Or will they be terribly disappointed if there is no public sector push?
I think it's very difficult to say how the markets will react, and markets are precisely like a voting machine, as Manish said earlier. But I think fundamentally the government needs to reduce fiscal deficit, because that is what gives you a sustainable way of growing over long periods. I think they may also support some consumption by cutting some tax rates at the lower income level groups. But fundamentally, if you see, India's tax to GDP ratio is very low.
It's 10% actually.
Yes, and it is lower than where we were 6 years back.
Yeah, that's right.
So it has to go up. And I think the government's job in infrastructure is more to create an enabling framework, transparent regulatory framework. And I think they are working with some very interesting funding solutions. So if you look at what has happened on the road sector, I think it is very powerful. So without really impacting the government too much, so they have created a 2-tiered structure for funding of roads, and government is saying, I will bring in the higher risk capital. So I think there is a lot of statements coming that we will work around very innovative financing solutions.
Has this market set itself up for a big disappointment if all you see in this budget is a keen eye on fiscal responsibility and nothing else?
Well, the way we see is the fiscal year, whether it's 3.6 or 4, doesn't matter. I think the number to look at in the overall math, whatever the saving that has been accrued to the government of India in the last few years, which is large in the nature of the subsidies, again coming from the oil subsidies as well as the related fertilizer subsidies and all put together, the estimated number is likely to be somewhere around 1,47,000 crores. And the number, where does it get added up to? The number is actually going to be spent once again on other related areas, such as again giving more money in the hands of people, or allocating more money in the hands of infrastructure companies in terms of building the necessary infrastructure. The way we see is, I think the allocation towards the capital expenditures to be undertaken by the government of India would be largely the true indicator of the commitment of the government in terms of getting back the growth path for the next year. So that's one. Second is, even in terms of tax collections, we actually had done some analysis. There is one component, which is of course the service tax component, also has been on the rise. So there is a high likelihood of the tax collection, especially in the service tax, also showing some kind of uptake. So in actual, if you look at it, I think the large expectation in the market is whether it's 3.6 or 4. I think whether it is 3 or 4 also, I think market will not mind, as long as The money is going to be spent on the productive assets in terms of getting back on the growth path.
If you don't get a game-changing budget, are you in for a big bout of selling in the markets?
I think there will be a big disappointment. I think there is significant fiscal space, and while I'll belabor the point a little more, actually if you look at the total tax revenue which is going to be there and the other non-tax receipts, actually we are seeing a growth from 15 lakh crores to 18 lakh crores in the next year. This is, I'm taking both the state share as well as the centre's share. And this is all after, I mean there is no devolution in this case because this number is anyway going to go up. Now look at the capital expenditure which we have done, let's say in FY 14 and 15. I think the total investment is in the region of 200,000, 250,000 crores. Now, if we can raise that number by 50 to 60,000 crores, it's a big impact to the economy. And why not do it? I mean, it's a counter-cyclical move by the government. The private sector is not in a position to invest. They don't have the money in one place and the sentiment to invest. And this is, I think, at this point in time, the government should really step up and give that 25-30% increase to capital expenditure, their commitment to whether it's infrastructure, largely infrastructure essentially. So I agree, absolutely. I mean, if they don't really stand up and really push it in at this point of time, it will be a disappointment.
Well, some influential market voices there on their expectations from Budget 2015. The market's hoping that the government will try and pump prime the economy by giving infrastructure spending a big boost. Remember, as we've been pointing out, there is some wiggle room there for the finance minister on account of the gains that they are going to see because of crude prices coming off so sharply and, of course, significantly better performance on disinvestment, though we don't know whether they will be able to meet that target or not. That is the attempt for now. In a big setback for the Sahara Group, the Supreme Court has allowed the Reserve Bank to take action against the group for violation of orders by the court as well as the Reserve Bank of India. Now remember, the Reserve Bank had moved the apex court accusing Sahara of not depositing securities worth 484 crore rupees with SEBI. In today's hearing, the Sahara Group has also informed the court that its deal with Mirac is not going to go through. Ashmit joins us now with more on both those developments. Ashmit, almost a year on the 4th of March, or exactly a year on the 4th of March, that Subrata Roy would have spent in Tihar jail. It's unlikely on the back of the developments today that he's going to find any relief anytime soon.
Well, indeed, it wasn't a pleasant outing at all as far as Subrata Roy is concerned in the apex court. First up, they had to contend with the RBI. The RBI had raised the contention that despite clear orders not to do so, but RBI claimed that Sahara had gone ahead with encashing directed securities, which include government bonds and FDRs, and that this money that was realized from encashing these directed securities, that money, RBI claimed, was diverted away. Now, this was something that the Supreme Court took exception to, pulled up Sahara for what it called was a violation of not just the Supreme Court order, but also the RBI order, and towards that end has given the RBI a free hand to go ahead and initiate proceedings against the group. This was, of course, part one. In the second part, Sahara, hoping for some relief, pointed out that though the Mirac deal had collapsed, they were in talks with other possible investors and buyers. They pointed out that a European bank has agreed to extend a loan of $1.5 billion. They pointed out that a Dutch pension fund has expressed interest and that they are open to the idea of selling Ambi Valley project. But none of these announcements, none of these proposals managing to cut any ice with the Supreme Court. On the contrary, the apex court pulled up Sahara for what it called was very little forward movement over the last few months, and towards that end has refused to extend any conferencing facilities to Subrata Roy in Tihar jail. So yes, as you had pointed out, all signs do point towards Subrata Roy spending that 1 year in jail come March 4th. Back to you.
So Ashmit, let's talk about the other big development that you're tracking today, which is to do with the corporate espionage case. What happened today on that front?
Well, after the Oil, Coal and Power Ministry, now we understand that the Defence Ministry officials are compromised. We understand that just this morning the investigating agencies have picked up one gentleman by the name of Virendra Kumar. He was picked up for what the investigating agencies termed was for creating fake IDs as well as for conspiring with the earlier arrested members that were from other ministries. Now this takes the total to about 14. That's the total number of arrests so far. But coming on the question of the 5 corporate executives that had been arrested, some relief coming their way. These corporate executives have now been shifted from police custody to judicial custody on medical grounds. But importantly, the cues that we were looking for coming from the investigating agencies, one, they have clarified that they have not yet recovered any documents from these corporate executives, the leaked documents that we're speaking of. The second and the relevant point that they raised was that they are casting a very wide net and that they're open to considering the idea of these leaked documents having benefited either the persons or their respective companies. So that's something that we'll have to watch out for. Tomorrow, of course, Virendra Kumar, his hearing will be conducted by the Chief Metropolitan Magistrate Court. We'll keep our ears open to that. But for now, all eyes on how wide a net the investigating agencies are prepared to cast. Back to you.
All right, Ashmit, we'll leave it there. Appreciate you joining us with the latest. On that note, it is time for us to wrap up this edition of India Business Hour. It promises to be another stormy session in Parliament, and of course the markets also promise to be volatile as we get closer and closer to Budget Day. From all of us here, goodbye. Many thanks for watching.